Hello everybody, the economy looks bad, inflation rates look awful, CPI index looks bad too. I mean, what's going on? These crazy things are happening. The DXY is down, stocks are up, Bitcoin is down. I mean, it's just confusion in the whole macroeconomy right now. It's absolutely crazy. So let's have a look, guys. The US Consumer Price Index for September could provide push for Bitcoin to break out of its recent range. Just today, however, we are crashing on Bitcoin. We're actually trying to retest the lower $18,000 levels. Hopefully that does not actually happen, but Bitcoin is now trading at $19,100. So little report here, a US inflation report due Thursday might be the catalyst that finally snaps Bitcoin out of an unusually long spell of uncharacteristically low price volatility. And let's say, well, to be honest, if we look at the actual correction from the market cycle top around $70,000 to the current price level, it's about 74%. So it's actually a rather usual correction in my opinion. So the Labour Department on Thursday is expected to report that the core consumer price index accelerated to a year-on-year pace of 6.5% in September from August 6.3%, according to FactSet. This core inflation rate strips out the impact of volatile food and energy prices. The headline CPI, which includes food and energy items, is already running hot above 8%, and this is some of the price action of Bitcoin. We can see of course, this was a long time ago in 2018, but similar things happened right in the economy, and we saw massive plummets and massive crashes for Bitcoin as well. So very, very interesting to see this particular article. If we look at crypto on a macro scale, again, many of the blue chip and the altcoins are down. Look at that, it's a dirty red ocean. Again, Bitcoin 18.4k, ouch, down 8% on the week, 17% on the month. It's down 70% on the year. I mean, it's normal. These corrections are normal. Bitcoin and Ethereum have almost corrected the same amount over the last year as well. So here's a bit of data for us to take a look at. This is the consumer price inflation, the CPI report again. So this is for America, I believe. No, my bad. This is the UK. But you can see we're all the way up to 8.6%. That is really, really not looking good, is it? It's some of the worst CPI numbers that we've even seen, dating all the way back to 1990. So it absolutely does not look good. Even looking at the last 10 years, you can just see how deleterious this particular price action is, or shall I say the increase here. It's just completely linear. It's vertical. There's not been any pullback really here for the inflation since March 2021, which was actually when the bull market kind of started to end. So very, very interesting to see this. For the USA, it's the same story. We're coming up to 8.2%. Really, really high. Do not like to see this particular information at all, but unfortunately it is the truth, and it is what is happening out there in the world today. The devaluation of all our currencies, the cost of living is going up, commodities, necessities and essentials are also going up massively. So what else do I want to look at? Well, the unemployment rate. We're in a recession, right? We have a very, very bad looking economy. The CPI is looking awful. Inflation, interest also looking very, very bad. But the unemployment rate has been going up. Or shall I say the employment rate has been going up. So there are less unemployed people. But why is this actually a bad thing? And why should it not be something good when you're looking at it? Well, in my opinion, the businesses out there, SMEs, small, medium, large enterprises, they haven't yet had that hit from the economy. There's a lag, so they haven't yet had that hit where they're going to feel that in their balance sheet, and in turn, when they do get a knock on those profits, and they really feel that when they look at their liquid assets, we're going to see people lose their jobs and get laid off, because it's not normal to have really good employment rates in recessions and tough economies like this, especially when businesses are forced to liquidate and maybe even consider operational changes. And if that means reducing their expenses and getting rid of staff, then they're gonna absolutely do that. We've seen that with many blockchain exchanges and other crypto related exchanges, because the crypto winter has just hit so hard on them. For example, Kraken and other exchanges. What happens when you apply that same sort of force to the real world out there? People will probably end up losing their jobs. So that's definitely something to consider as well. BLX chart. This is one of my favorite charts in the whole entire world of crypto. We can see today, this highlights Bitcoin. chilling at $19,100. There's a bit of a delay here, as we can see, but it does tell us that we are looking like we're in a good place to potentially accumulate more cryptocurrency. As we see 200-week moving average, we are under that 200-week moving average still. We're at the green logarithmic regression band. Things are looking rather good for dollar cost average, in my opinion. If you're ready to hold until 2024 or 2025, it's like buying crypto over here in December 18 in this green zone, or the March 2020 crash in the green zone, or any time from 2014 to 2017 in this green undervaluation phase is very, very much similar. So why would you want to buy crypto up here in the overheated, overextended phase when you can reduce your risk and have a long-term hodl strategy and actually grab more crypto over here? I mean, that's just the way I like to look at it. Here is the Bitcoin price as well. What's going on? We're getting rejected at this key resistance every single time on the diagonal. As you see, the last time was here on the 28th of March 2022, rejected at 48k. Then we had this nice rising wedge. We lost support. We traveled down. Again, we put through a double bottom, but we lose support again. And today we are on one of the biggest daily candles that we have printed for a while. A red one. We've lost this key support of 18.6k now. And it could be that Bitcoin is trying to hold this position. Otherwise, we might see continuation down to 17.6. We'll lose 17.6. Anything could be happening. It'll be bearish price discovery all over again. So let's have a little look at what could potentially happen here. I mean, we do have that 17.5k as a last sort of level of support. Interesting to see that we did bounce around here at the 18.1 mark, where we also fell down to on the 21st of September a couple of weeks ago. DXY, when we look at the DXY, it looks like it's starting to top out. It's looking overbought. We're seeing the same as 2015, so there's a chance that we might actually get a reversal now and see this spin round. I'm anticipating we will see the DXY come back down to around 104, and ideally we'd like to see it even come back down to 90, but that could be years and years before we see it come down to 90 again. It really depends. If we look at what has recently happened from this particular range here to where we are, it took 547 days, so it could still take another 500 to 1,500 days to get back down to the levels of 90 on the DXY. And typically when the DXY is nice and low, that's what's really nice for cryptocurrency as well. Another chart I wanted to look at today was, of course, the S&P 500. So stocks are coming down a little bit, but when you look at the smaller time frames, that just appeared. That was that wasn't there a few minutes ago. Wow, big stock crash. What is going on? That is a big crash right now for stocks. One of the biggest red minutely candles we have ever seen, just in the space of a minute. That's tremendous. That is pretty shocking stuff, to be honest. But let's ride this one out and see what could potentially happen, as things are going to get interesting now. We've just seen this happen on the S&P 500 charts. So that is a crazy wave right there. That really is for stocks. And if we get a percentage, even though it's small, just 3%, that's 3% in a minute. So that's quite a hot minute, isn't it? Let's be honest. IMPT token today, this is of course the pre-sale that we're looking at on the channel. There is another one that we'll be talking about very soon. It is being back tested as we speak. People in the Discord channel know all about this one, so if you want to hop into the Discord, come and say hi. We're talking about all the upcoming pre-sales as well, which can make massive amounts of money. The last two pre-sales we looked at did over 7x and also a 20x one as well, known as Tama Doge. IMPT token is an impactful carbon offset program by investing in the IMPT token. So it allows you to connect to socially responsible brands and individuals, also businesses too, to help reduce their carbon footprint. And you can provide a solution to the global warming out there in the world today. So crazy stuff. $4 million raised in over 10 days. Very bullish. And I have 105,000 of these tokens, which is around $2,000 worth. I will be buying more. Let's connect this wallet, see what's going on. I will be buying some more. IMPT just slowly dollar cost averaging in. I'll probably grab a bit more before pre-sale phase 1 ends. But yeah, I just wanted to share this on the view. I will leave this down in the links and the comment sections below for you. IMPT, have a look at it. Check out the OKX exchange as well. Sign up for a $10,000 bonus and make sure you get yourself in my Discord channel. It's very important that you do. Find my Discord, come and say hi, connect with all the people. We're talking about pre-sales, staking, DeFi, meme coins, NFTs, absolutely anything. The signal's there to trade on. on leverage signals. There's charts, data, analysis, insights, just everything you absolutely need, guys. So please do go on and find yourself into the Discord. It's completely free. Anyway, that's about a wrap. Subscribe if you're new here, like and comment, and I shall see you soon.